to. Frank Napolitano's here. First of all, let me give you one of these. It's our bracelets for today, the Bell Let's Talk bracelet.
Fantastic.
To remind people to get out there and talk about, if anything, you know, there's tweeting and texting and long-distance phone calls today to raise money, but the idea is to actually talk about mental illness, and I know that's something you believe in right in our own backyard.
Very, very much so, and of course we suffered through there in Richardson and the IFD, and nice to see the kids. I mean, my son had his purple shirt out for today as well.
Isn't that
for school,
nice?
So really good that the teenagers are into it.
Well, and I think that's the most important thing. Right?
I agree.
You know what it's like. You've got
Totally
three young,
yes, I do.
young people yourself. We're going to talk about collateral mortgages today, something we discussed a long time ago. First of all, what is a collateral mortgage, Frank?
Collateral mortgage is registered a little bit differently than your standard mortgage. Your standard mortgage gives you the opportunity to be able to do your mortgage with an institution, and at maturity date, that standard mortgage is transferable to another institution, which gives you bargaining power.
Right.
Some banks now are starting to register just collateral mortgages. So TD started the trend a little over 2 years ago, and now some of the other banks are talking about doing the same thing.
Right.
Now, TD will put a spin on it where the advantages of a collateral mortgage, and there are a couple, one of them including you could actually register the mortgage for a higher amount than you're actually getting, so that therefore if you need to refinance at some point throughout the term of your mortgage, it's already been registered, so you don't have to visit a lawyer anymore.
Right, right.
So that's a positive, and there's no question that that's a positive. That being said, most people that I meet, their goal is to pay down their mortgage, not have to continually bring it up. So some customers won't have anything to do with the collateral because they don't even want the temptation of having that available to them.
No, they'd rather work on paying down that mortgage as quickly as possible, which is never a bad plan.
It's never a bad plan.
Right.
That being said, I mean, the bank will put a spin on it that, you know, it's there, and they're absolutely right once it's registered, but don't think that there's no fees in doing it still. You still have to qualify. So I've had customers say, well, it's good because it's registered, and if something happens where I lose my job, then I can just go in and they'll increase it for me. That's not actually the fact. The fact is that you still have to qualify for it, so any increase you have to qualify for, not to mention the fact that there's still going to be an appraisal fee enclosed with that too. So, so it's not like it's done for nothing once they register it. So just be aware of that. But the most important factor I think that a customer has to make when they're deciding whether they're going to go with a collateral mortgage is that you lose your bargaining power at the maturity date. Because the thing with the collateral mortgage is that if you're going to move it from one institution to another, you're going to have to incur legal fees to move it over.
Right.
So banks know this. The banks that are registering collateral mortgages know this. So therefore, you're not getting as good a rate at your renewal, because they're going to throw at you the fact that, but if you leave us, it's going to cost you this amount to go somewhere else, and that amount to somewhere else.
So there goes that idea of shopping around.
There goes the idea of shopping. So you do lose a lot of your bargaining power with a collateral mortgage.
Do you recommend it?
Do I recommend it? I think for some customers, listen, there's some banks that have better rates than others, and I think a customer has to make a decision as to whether that, sometimes we can get 5 basis points better from a mortgage company that has a collateral mortgage.
Right.
So therefore, some customers just want the best rate no matter what. But other customers will sit back and say, wait a second, the collateral mortgage is not what I'm looking for, so I want a standard mortgage. So find me the best rate for a standard mortgage.
Real quick, are you keeping an eye on what's happening with Mark Carney and Parliament Hill and the Bank of Canada and all that? Because it could have an effect on interest rates. Matter of fact, it likely will.
It likely very well. And, rates are expected to start to go up. And, many people are fooling themselves if they think that even though the economy hasn't quite, picked up the way many expected it to, that rates are going to stay flat for the rest of the year. I don't believe that. I think that we're not far away from starting to see some increases in fixed rates. I think the prime rate might be a little longer, but I think the bond market will start to go up and fixed rates will start to go up sooner rather than later.
Frank Napolitano and his team at mortgagebrokersottawa.com will be keeping an eye on that. So any questions you might have on that or the idea of these mortgages, ask some questions. Get in touch. Simple as that. It's just like Let's Talk.
Yep, let's talk. Let's raise some money.
Got to talk about it.